Most business owners think trading is risky, but what if I told you my students use a system where they risk $100 to make $500 and do it in just 1 to 2 hours a day? Let me prove it to you right now. You can see here my student was making $4,860 by trading 11 times that month. Because he's from Europe, it's nighttime between 4 p.m. and 10 p.m. selecting somewhere 1 or 2 hours. In your case, if you're from America or Canada, it should be between 9 a.m. and 4 p.m. And we're going to talk here about a day where he was losing $62 that trade, 50, and he made within the next trade $700. And there's a 3-step method that I hope that you can use for your own trading. Here you can see the trades, and how this runs is that first we don't know, of course, where the market was going at. That means what the student is doing is that he first makes a picture, shows me where does he assume the market is going at. And if you just look at the market within the past 3 or 4 hours, the market was going higher. That means his assumption was exactly this drawing, what you see here, the gray line here, and he was assuming that the market continues to go higher to this bigger structure high here, what you see here on the left side. The market is usually aiming for bigger structure highs and lows, and when going up, we don't want to see more than 3 red candles, and when going down, we don't want to see more than, let's just say, 3 green candles. And this is how we can see also better when the market is in a trend. Here you can see that the market is making more than 3 red candles. But the thing is that afterwards, the market started here to push out very well, and then it did not more than 3 red candles in a row. So this is something what's very important for active reading. This is the main reason I believe in we need to do still everything manual, why it's extremely way more efficient than doing it automated over a program or whatsoever. So here's the thing. Step number 1, the trader was drawing in a square what are 2 hours because he said he wants to trade it for 2 hours. Comparing the last 2 hours, the market did length within this move here, as you can see here. Because the market did this length here, the trader assumed that the market would do around the same length, and this is what you can see here with the gray drawing, right? So it would make a lot of sense that the market goes to this bigger structure high, and it makes less sense that the market would go to this bigger structure low because it's just too far away. It would take hours. So the most important thing is when I'm trading for 1 or 2 hours, what makes the most sense, and to make, of course, use of that. Then step number 2 is we look if the market would go also in that direction, and we need to be careful because making money is one thing, because we can see like, oh, this length could be like $3,000, $10,000, but the money management is more important. So what you need to look at is the past 1, 2 or 3 hours, how big were the moves against us, and these are called retracements. So you can see the retracement was had this length here, and you can see another retracement had here this length in average. That means when the market is going higher, we can assume that the market comes back within this length. That means going up and then comes back within this length here and then continues to go higher. So we're going to look now what the trader did and how the trader behaved. This is something what's really important. In the first 5 minutes, we do our trading plan already. We know already in what direction we want to trade. And only if the market is showing us that the market is doing something else, that our trading plan doesn't make any sense anymore, that we don't see any sense that the market goes to this violet lines, then we would change our trading plan and adjust to it. But usually, if you trade for 7 times a month for 1 or 2 hours, you should have 30 to 40 trading opportunities to adjust $100 to make $500, but we'll go over the Excel sheet later. So afterwards, the trader was taking after the 1 or 2 hours, in this case it's like 1.5 hours, he took a picture because his expectation has been met. After 1 hour, you can see here the market was touching really also the violet line here, the biggest structure high, and he was finished for the day. Why? Because he was placing his trades already, and this is what you can see in the third picture, right? Here you can see how the market was doing more than 4 red candles, and this is something what's dangerous, but he was seeing that the market was structuring higher and doing higher lows. A low is a red and a green candle, and you need to be careful because there are different kind of size in that structure. That means you can see here there's this really big structure that looks like that, and there are also the smaller structures. That means each red and green candle is like you can see here, the market does here multiple higher lows, but this is where beginners and even intermediate traders lose a lot of money, is because they get overwhelmed by the structures. So it's very important, and this is what we just talked in picture number 1. We need to assume that the market does this length in retracement, and then we want to see that in this length market goes down, goes up. And then you want to see again that within this length around-ish, that the market goes down and goes up. And important is that there's also color switch on the bottom. So you can see here, red, green, right? The market is structuring here lower within this range, and it's every day different. And this is the main reason why adjustment is very important. We need to be also flexible with our trading strategy. And now you can see within this length here, the market the first time from here goes up and down like this, and then here the first time it structures higher, and because it starts here to structure higher within these lengths, and the market is doing not more than 3 red candles, as you can see here, like you see the market is doing less red candles, more green candles, is structuring higher. This was the main reason why the trader adjusted here. This is also when it comes to futures trading, $62.50 for this trade, using just a red and a green candle, just trading a green candle between a lot of green candles. We're seeing that the market is having more up pressure by seeing more green candles. Stop placement should be on the color switch, on the wick. As you can see here, he took the left wick of the color switch. It's very experienced, like intermediate. It would be better to place the stop here for a beginner. And then very important is to make the calculation that it's $62.50 for the trade in average, and then when the market goes in our direction, this could be a $700 trade. The first trade was a losing trade. And then the second trade, you can see how the market dips down, comes back up. Please ignore the blue lines first. What is really more important in the beginning is that if you can see that the market does this length here, and you see the market comes back around the same length and does just a green candle and structures higher, it's more better to trade this one and beginner friendly than just taking any indicators first. If you want to know more about the Anchored VWAP, what you can see here, this is a volume weighted average price. Just check out the other video on this channel, but it will be really better, I think, to go with this structure because it's just more beginner friendly. Then what he did is before like 5 to like 10 seconds before this green candle was closing, because on the right side we have a timer, he was entering the trade, calculated his money management, adjusted his $87.50 for this trade. In the practical side, we can't always adjust 50, 150 or like $87.50 or $62.50, just like the same amounts. So they will differ by 20 or 30%. This is normal, but I think the trade was really professional because it's aroundish the same. Like he adjusted $62.50 for the first trade, and the second trade was just like $20 to $30 more. And the awesome thing is the second trade made him $700, and this is something what you can see in this Excel sheet here, right? He lost here $62.50, and with the second trade he made $700. And by trading 11 times that month, he made this result. He had this 18 trades, and the awesome thing is he had 6 other trades and I think like around 20 additional trades in opportunities. That means trading 11 times for 1 or 2 hours, he had like 30 to 40 trading opportunities, but he took of them only 18 of them, because it's important, of course, to read what the market is doing and then just to differ from quantity, which of them is quality, which of them for me is an investment, because we can see it over and over again and we just gain more with experience with it. So step number 1 is identifying bigger structure highs or lows. Going with market pressure, we need to identify what is dangerous for us, those retracements. Step number 2 is, as you can see here, when the market is going in that direction and fulfilling that, you can see this here with the gray line, trading as the plan is. If the market is reaching now here this dotted line, it's important not to trade up here anymore, because very often the market is catching or touching the bigger structure high or low and then going into a consolidation phase. This is where traders lose a lot of money. So it's just about, like, if you trade for 3 different kind of days or 5 different kind of days, it's just important in the first 45 minutes to 1 hour or maximum 2 or 3 hours that if you see the market is going to a bigger structure high or low, to trade to that point. And if the market touched that, this is exactly where trade quality decreases by 5 times. It's really insane. So it's not better to trade in the second market or to have another indicator. It's just better to have repetitions in a different kind of trading days. And if you sit down for 5 weeks, 1 or 2 times in average, you will find enough trades using this color switch trading strategy, just using a 1-minute chart. If you're a business owner and want to see exactly how this works, click the link below to schedule a call. I'll personally walk you through it live, step by step. Wish you all love, good trades, JT out.